It's time to ignore the noise because right now, everywhere you look, the headlines are screaming. The bull run is over. Crypto has topped. It's time to sell everything. And worst of all, it's coming from the same people who were calling for a 250,000 Bitcoin just a few months ago. Let me say this loud and clear. They're wrong. This bull market, it's not over. In fact, it's just getting started. And in this video, I'm going to show you exactly why. Section 1. This is not a bear market. Now I get it. The market's been choppy, it's been sideways, and it's been very boring. You've seen some coins bleed out, some influencers going a little bit quiet, some charts looking shaky, but guess what? This is not a bear market, not even close. What we're in right now is the natural mid-cycle consolidation. Zoom out and everything is on schedule. You see, crypto still follows a 4-year cycle. That hasn't changed. It's not dead. It's just evolving. And this cycle, just like the one before it, is tied to something a lot bigger than tweets, elections, or even halving events. It's tied to liquidity, the global M2 money supply. And tracking this liquidity is one of the things I'll be doing to take profits. See below if you want to see my full strategy in detail. Section 2. Liquidity is king. Here's the truth that most retail investors miss. Crypto is not just a tech story. It's not just about innovation or communities or meme coins. Crypto is a liquidity sensitive asset class. That means it thrives when liquidity expands and it crashes when liquidity dries up. And right now, liquidity is building. Let me explain. Every few years, especially in the US, we hit a wall of debt that needs to be refinanced. 2025 is one of those years. And when that happens, central banks around the world, including the Fed in the US, are forced to act. They lower rates, they inject capital, and they print money. And when that liquidity enters the system, it doesn't trickle in slowly. It floods into assets, especially the most volatile and liquidity sensitive ones, assets like Bitcoin, like Ethereum, like the altcoins sitting in your portfolio. This is the hidden driver of every major bull run we've ever seen, and it's happening again right now. Section 3. Macro is setting up the launch pad, the firework up the arse that crypto actually needs. Now let's zoom to the macro landscape. Here's what's going on globally. Government spending is cooling, employment is softening, GDP is slowing, inflation is coming down. To the average person, that sounds like a recession brewing up. But to a macro investor, that's the Fed laying the groundwork for stimulus. Think of it like this. They're easing off the pressure so they can turn the dial back up later on. With printing, rate cuts and credit expansion, this is a chess game and most people are playing checkers. The system we live in is debt-based. It requires constant borrowing to survive. So when things start to slow down, they don't just let it collapse, they flood it with money. And when they do that, crypto doesn't just rise, it explodes. By the way, I'm not a macro expert. I'm watching people like Raoul Pal, like most of the other crypto YouTubers, and doing my best to put my own spin on it. On that note, I'm not a financial advisor, and this isn't financial advice. As always, I'm just trying to help you with my 8 years experience in crypto. Section 4, smart money is front running you. Don't just take my word for it. Just look at what smart money is doing right now. Fidelity, a 5.9 trillion asset manager, filed for Solana ETF. Google has recently partnered with Injective. Crypto.com is teaming up with Trump Media. GameStop is putting Bitcoin on its balance sheet. And Michael Saylor has just bought another 6,911 Bitcoin. These aren't your average retail investors like me and you. These are institutions, hedge funds, billionaires, and they're loading up now while retail is still hesitating. Ask yourself, do they look like they think the bull run is over, or do they know something the average person doesn't? Spoiler, they know liquidity is coming. Section 5, stay calm, stay focused. Now look, this part is important because emotionally, this is where most people get wrecked. The panic sell bottoms, the chase green candles, they get glued to their portfolio literally 10-15 times a day and they miss the bigger picture. So here's what I want you to do. Don't chase the pumps. Don't check your portfolio every 5 minutes. Don't listen to clickbait doomers. Do zoom out. Do trust the cycle. Do understand the macro. Crypto is a game of patience, positioning and perspective. So stay calm, stay neutral, and stay ready. By the way, if you want more help and support with crypto, if you want to get around other crypto investors, you can join my crypto community over on School. See below for the link. And it's zero risk because you get a 7-day free trial. Section 6. Here's what to do next. If you want to survive and thrive in this particular cycle, here's what you need to do next. Keep learning. Macro is everything. Study the money supply. Understand debt. Follow what the Fed is doing. Know the indicators. M2 money supply has already started climbing up and it leads crypto performance by 8 to 10 weeks. Watch sentiment. Use the fear and greed index, the Bitcoin dominance chart and the others dominance chart to track where the money's actually flown. Join the community. Again, the link is below. You become a better investor, in my opinion, when you're around other investors. Summary. So let me leave you with this. This bull market, it's not over. The big move hasn't even started. We're heading into what I believe will be the most explosive phase of the 2025 cycle. So breathe, zoom out, trust the process, and if this has helped you, smash the like button, drop a comment below, and make sure to subscribe so you don't miss out on what's coming over the next few months. Thanks for watching and good luck with your crypto investing.